On a quiet night, as moonlight streams through the window, I found my old high school yearbook. Inside, memories that I had almost forgotten came flooding back, vivid and clear as if they were from yesterday. Hana Coin has burst onto the crypto scene with an eye-catching surge in trading activity, leaving both seasoned investors and newcomers wondering whether they are witnessing the birth of a groundbreaking project or the early stages of a speculative bubble. In just a matter of days, social feeds, small-cap exchange listings, and Telegram groups have filled with chatter about this emerging token. Such meteoric attention naturally raises the question, is Hana Coin riding a wave of genuine innovation, or is it being propelled by the classic dynamics of a pump-and-dump scheme that ultimately leaves latecomers holding the bag? To evaluate those possibilities, it's helpful to revisit what a pump-and-dump actually entails. In traditional markets, the strategy involves aggressively promoting an asset, inflating its price with coordinated buying, and then selling off at the peak, leaving unsuspecting buyers with losses. Crypto markets, being decentralized and often lightly regulated, have unfortunately provided fertile ground for such tactics. Understanding these mechanics gives investors a lens through which to interpret Hana Coin's sudden ascent without jumping to conclusions. Fundamentals form the backbone of any sustainable cryptocurrency. For Hana Coin, that means examining its underlying technology, stated mission, and the specific problem it claims to solve. Is it aiming to revolutionize decentralized finance, enhance cross-chain interoperability, or simply exist as a speculative meme token? A well-documented white paper, a public roadmap, and evidence of active development are the signposts of a legitimate project. When these pieces are thin or missing, the risk of market manipulation naturally feels higher. Price data tells its own story. Hana Coin's recent chart shows an explosive jump over 150% in less than a week, followed by intraday swings of double-digit percentages. Volatility alone isn't proof of manipulation, but it does demand closer inspection. Analysts would typically look at order book depth and liquidity on each exchange to see whether large trades can move the price dramatically or whether the market is broad and resilient. Social media dynamics often provide early clues to coordinated promotion. A sudden wave of enthusiastic posts from newly created Twitter or X accounts, slick tick clips promising the next 100s, and Telegram groups pushing urgent buy signals are all hallmarks of an artificial pump. Using simple tools such as keyword alerts or sentiment analysis, one can gauge whether the buzz around Hana Coin is organic or the product of a calculated marketing push. Blockchain transparency allows anyone to examine the concentration of holdings. If a handful of wallets control a large percentage of the total supply, those so-called whales have the power to crash the market by selling simultaneously. On-chain analytics platforms can reveal these concentrations, showing whether Hana Coin's ownership is broadly distributed or precariously top-heavy. Equally important is the credibility of the development team. Legitimate projects typically showcase their core contributors, share verifiable professional backgrounds, and maintain clear communication channels. Anonymous founders aren't automatically suspicious. Bitcoin's creator is famously pseudo-municipal when combined with vague promises and aggressive marketing. Anonymity can become a significant red flag. Exchange listings influence both liquidity and market integrity. A coin that trades almost exclusively on a few low-volume or offshore exchanges is more vulnerable to price manipulation than one listed on multiple reputable platforms. Checking where Hana Coin is available, the trading pairs offered, and the daily turnover provides a clearer sense of how easily its price could be swayed. Historical patterns offer perspective. Has Hana Coin experienced previous boom and bust cycles without delivering new features or partnerships in between? Repeated parabolic rises followed by steep collapses by tangible development often point to speculation rather than sustainable growth. Media coverage can amplify excitement or fear. Headlines outing the next Ethereum or a guaranteed moonshot are designed to doctor clicks and may lure inexperienced buyers. Seasoned observers look past the headlines to see whether reputable outlets are performing balanced analysis or merely echoing hype seeded by anonymous promoters. Regulatory context matters too. Different jurisdictions impose varying standards for market manipulation and investor protection. If Hana Coin's primary exchanges operate in regions with minimal oversight, the risk profile changes. Investors should be aware of how local laws or the absence of them could affect their ability to seek recourse in the event of fraud. Community culture can be a litmus test. Healthy crypto communities discuss technical milestones, governance proposals, and long-term adoption. Communities dominated by price memes, to the moon chants, and endless countdowns to unspecified announcements often signal a focus on speculation rather than substance. Utility remains the cornerstone of lasting value. Does Hana Coin enable faster cross-border payments, unlock new decentralized app capabilities, or integrate with existing DeFi protocols? Coins whose only selling point is price appreciation rarely sustain their momentum once early excitement fades. Risk management is critical for anyone considering a position. No matter how promising a token appears, prudent investors set position limits, diversify across asset classes, and establish clear exit strategies. In crypto's volatile landscape, treating any single asset as a sure thing is an invitation to financial pain. Looking to history, we can find instructive parallels. As pump and dump epistazampada obscure 2017 altcoins to more recent meme token freneswood safe and share common markers, coordinated influencer tweets, abrupt liquidity withdrawals, and sharp reversals once insiders sell. Comparing these patterns to Hana Coin's trajectory can help identify early warning signs. Transparency reports and independent code audits are another layer of protection. A serious project will welcome external security reviews and publish results. If Hana Coin offers none of these and relies solely on marketing slogans, caution is warranted. Investor psychology is a powerful force. Fear of missing out FOMO can lead rational people to chase prices higher despite weak fundamentals. Recognizing these emotional triggers, especially during sudden rallies, investors stay grounded when markets turn euphoric. The other side of that coin is fear, uncertainty, and doubt. Sudden negative rumors can spark panic selling even when the project remains sound. Developing the discipline to evaluate information calmly rather than reacting to every tweet or headline protects long-term capital. Ultimately, education is the best defense. Understanding blockchain basics, learning to read smart contract code or at least audit summaries, and staying current with market structure analysis empowers investors to make decisions based on evidence rather than hype. Whether Hana Coin becomes a lasting player or a cautionary footnote will depend on the team's ability to deliver real technology and on the market's willingness to reward substance over speculation. Only time, transparency, and continued development will reveal whether today's excitement marks the start of genuine adoption or merely another brief chapter in crypto's long history of boom and bust.